Hey team, right now we're going to cover the actual flip chart presentation. So if you haven't listened to the kitchen table appointment process, please listen to that. That'll cover what you need to have at a kitchen table. Okay, so we're gonna skip the pre-talk, and then we're gonna dive right into. We're gonna dive into what the trainee says to the couple. We're sitting here with Jeremy and Dorinda, and Pat's the trainee. So we're going to dive right into it. So make sure you listen and learn this, and listen to it over and over again. So we're going to dive into the trainee.
Hello, Dorinda and Jeremy. Thank you so much for seeing me today. Let me introduce you to my mentor. He is my mentor, Mr. Rod Hausman. He's one of the most knowledgeable people in my office. I've learned a lot from him. Thank you very much for helping me with my training. I'm very excited about this opportunity. Primerica has taught me a lot. How money works, and how to set and achieve our financial goals. I'm looking forward to sharing the concept with others.
Cool. We again, I want to thank you for spending time here and helping Pat in her training. We're really excited about her and what she can do. We're hoping she has what it takes to make what we call as a regional vice president and run her own office. Your job tonight, guys, is to ask a lot of questions, laugh about our jokes. I can't have you just sitting there nodding your head. Right? So I need you to ask a lot of questions, because eventually Pat's going to be sitting in where I am in about 2-3 weeks. All right. All our business is done on a referral process. So I'm sure as we go through the concepts, what we share with people, what Pat's learning, somebody will come to mind and that you might be able to refer us out. And the last is what we like, our solutions or our service. If you like something in here, and you can invite us back, or we can talk further about it when we're done. Is that fair enough?
Fair enough.
All right. Are you guys familiar at all with this company, Primerica?
No.
Dorinda?
Yeah, I heard of some years ago. I not really know a lot about it.
No, okay. It's actually, we've been in business since 1977. This is our 38th year. As you can see here, we're the largest financial service marketing organization in all of North America. If you want to do some research on us, we're on the New York Stock Exchange. Our stock symbol is PRI. 6 million clients, Jeremy. But here's the key: we've done all this without any national TV or radio advertising. Dorinda, how do you think we become the largest financial firm and develop 6 million clients without running an ad?
Must be good word out there.
It is. It's all word of mouth. So the word's got to be good and not bad, right?
I'd say so. It must be.
Yeah.
Some of the research has been done. I don't know if you heard of Warburg Pincus, but they're an investment banking company. So when you go public, you got to raise money. So they took $10 million. Took 3 years, 60 attorneys and financial advisors, and researched us for 3 years. And then once they were satisfied with that, they invested $230 million in our company. You think they liked us?
Yes.
I'm going to guess yes.
Yeah, they did. We're part of Better Business Bureau, and we're rated A+ by AM Best. That's pretty good rating. Wouldn't you agree?
Yes.
Doesn't get any better, for real.
No. So we deal in 3 main areas. The biggest area we deal is in the investment field. Jeremy, you've heard of some of these companies: MetLife,
Lincoln Financial Field.
Yeah.
Yep.
Lincoln. Yeah, if you're an Eagles fan,
I'm not, but I've heard of it.
ING, which changed their name to Voya. The second biggest area, Dorinda, is we help people out in different areas of debt. Okay. You've heard of Equifax, right? They're a credit reporting agency. Mm-hmm. And the last area is we deal in different, areas of insurance: auto and home insurance, long-term care, and life insurance. We are a one-stop financial supermarket with home delivery. Right now, I want to change gears with you, because the guy I'm working with, he runs an office in Dover, and his goal is to open up 5 more locations in the next 3 years. And so we're looking for some people both to work with us full and part-time. All right, and I'm going to show you 5 reasons why people get involved. All right, Dorinda, the first is we get a lot of people that don't like their current job and are looking for a career change and better income. Someone that's been laid off or topped out where they are, they just, they just need to make more money. Excuse me. The second, Jeremy, is they love what they do. We get a lot of people who love their job, but earning an extra $1,000 to $2,000 a month, working 10 to 15 hours a week would be a positive difference.
Yes.
Third area is we get a lot of people who want to learn how to win the money game. And would you agree with me that money is a game?
Yes.
Yeah.
Absolutely.
So we give them a financial education so they learn the concepts, the rules of that game, and then they can win it. The fourth area, we get a lot of nurses, coaches, teachers, social workers, because they love helping people and making a difference. They just have that in their blood, you know. And the fifth is they dream of having their own business. All right. You ever guys ever think of having your own business? Well, you do, don't you, Jeremy?
Yeah, absolutely, all the time. I actually used to have my own business. Just kind of the economy went down, and you know what happened in 2008. So,
So that hurt. Why do
Oh, yeah.
people want to own their own business? What would you say?
for me, it was controlling my time. It wasn't so much about money. I wanted time.
Mm-hmm.
You know, and I mean, even though I didn't make as much money, sometimes I controlled my time.
Yeah.
Got made all my daughter's sporting events and stuff like that.
That's good. Dorinda?
Freedom.
Freedom?
Freedom.
Freedom, yeah. Can you see where most people would be interested in one of these 5 areas?
Sure.
Yes.
So what I'm going to share, we get most of our candidates through what we call is a green card system, you know. So you know why we call it a green card system?
The color of money, obviously.
Yeah, it is. No, it's actually a green card. So as I go through this, I'm going to put 2 in front of you, Jeremy, 2 in front of you,
Okay.
Dorinda. And as I go through this presentation, I want you to think of 1, who do you know that could benefit from making an extra $1,000 to $2,000 a month part time? And 2, who do you know that says, man, I love to own my business. I want to make 6 figures. Every presentation I do, I always walk out with 1 or 2 of these. You know, if I'm going through it and someone comes to mind, you know, we'll stop and jot their name right down. Okay? And then we'll continue. Anybody come to mind right now?
Actually, I know this guy Daniel talked to me the other day, and I think he's kind of looking for something on the side. Though he works full time. Should I? What should I?
So I'll put that. I'll put Daniel. We'll write Daniel right now.
Okay.
I'll put him down there, and we'll get back to it. Anybody, Dorinda, come to mind or something?
Yes, there is someone at my job. Her name is Gina.
Gina.
Yes.
All right. Gina, and then we'll hold on to that. I'll get the rest of the information afterwards.
All right.
So let me tell you about our mission statement. All right. Our mission statement is we want to help families earn more income, become what we call properly protected, debt-free, and financially independent. Which one of these 4 sticks out to you guys? Jeremy, which one of the 4?
Oh, it's got to be financially independent, man.
What's that mean to you?
It would mean controlling my time again. I mean, actually not having someone else tell me what to do, but have enough money to do what I want to do.
Do what you want to do?
Yeah.
How about you, Dorinda?
Again, the word freedom is what sticks in my mind. The freedom to come and go and do as I want for how long as I want and who I want.
That's it. That's what our definition. You know, doing what you want, when you want, for as long as you want, with whomever you want. You know. Do you think it's possible to get there? Do you think people are there today?
Most people know.
No.
No.
No. How about debt free? Is that a challenge out there? Is that hurting people?
Oh, there's
Absolutely.
no doubt. No
Yes.
doubt.
So you agree with these? These are some very important areas.
Absolutely.
Yes, they are.
Let me show you some of the statistics with us. More than 2/3 of the United States now live paycheck to paycheck. You know, I've been there once or twice a long time ago. It's just not a good feeling. Would you agree?
I agree.
We've been there too.
Yeah.
You know.
The average American now has at least $16,000 in credit card debt. Would you guys say you're average, above that, or below that?
We think
Just a little below.
probably just
Just a little below.
Yeah.
You know, so more than half of all Americans have no emergency savings. Are you that half or the other half? So I'm assuming you're that half. Yeah. So 95 million adults have no life insurance. You have life insurance, right, do you?
Yeah, I actually have 2 policies. They're like no more. I think they total to about 50,000 or something,
Okay.
or it's the savings or something like that.
Dorinda, how about you?
I have a little bit at work through my job.
And then here's the scariest one of them all. More than half of all workers have less than 25,000 in savings and investments for retirement. So you got a retirement program at work, right? Or?
Yes, I do.
Okay.
I don't have anything
You
for,
don't?
for retirement now.
Yeah. So you agree that these are real and serious problems?
Yes,
Oh,
they
yeah.
are.
Yes.
And that's why we need the green cards. You know, that's why I'm looking for some people, and that's why I love what we do. You know, now here it gets even better. You know, and I don't mean to depress you, but there's 100 people at age 65. The Department of Health and Human Services looked at these people after working 40 years, and here's where they found out: 54% of the 100 are dependent on government or family for money. Frankly, they're just broke.
Right.
Yeah.
You know, that's half our
Wow.
people who are senior citizens. 36 of them, so that makes 90%. 36 are working. Do you think they want to work or have to work?
Probably have to.
They probably have to. Yeah.
Have to work. 5 didn't make it. 4 are stable, meaning they have $1 million net worth. and one is wealthy, has a net worth of $5 million. So if I ask you guys which categories you want to be part of, what would you say?
It's definitely at least the 4. I mean,
Down there, right?
Not the 5. That's for sure. Yeah, we want to be here.
So we asked, why do 95% fail when it comes to their finance? I want to change that around. Don't we want to know what the 5% are doing that the other 95% aren't?
Darn right.
Yes.
Makes sense. So here's what they're doing. The 5% have a financial plan. You know, they have a financial coach. They have financial education, and most of them own a business. So that's what I love about Primerica. What we provide are all these 4 areas, and we want to do as a company is we want to take people from this area, the 90% up here, and move them down and increase to 5%.
Okay.
Pretty big, huh?
Me.
I like that.
Pretty big. So what I want to do now is show you the concepts that we teach people. So again, I want you to look at it with 2 eyes. 1, could it benefit you guys? And 2, who do you know that it could benefit? Or the green cards, if you do what I do, you know, if you know someone that could they learn what I'm teaching? Here. First is, you ever hear this rule called the Rule of 72?
I don't know. What's that? What is that?
It's called the old banker's rule. Okay, let me show you how this works out. I like this. All right, who's your youngest child?
That would be Jeremy Jr. He's 7 years old.
Jeremy Jr. All right.
Yep.
So he's 7, right? It's called the Rule of 72. All right, and how it works is whatever interest rate you get, you divide it into 72. All right, and the answer will be the number of years it takes your money to double. Okay,
What do you divide into 72?
the percent, what you earn on your money,
Oh, okay. Okay.
divided into 72. Your parents are around, right?
Yes.
One of mine is.
One of it.
Yeah.
So what if they came to you and say, look, we want to give you $2,000 for Jeremy Jr. We want you to save that money for him. Where would most parents save that money?
Probably a bank or something.
In a bank.
Savings account.
What's a bank pay interest-wise?
I hate to admit, I don't know, man.
You don't know? Do you have a bank now?
Yes, I do.
Do you do bank online or go in?
I do online.
Okay.
But I was in at the bank the other day. I needed to get some change, and I think I saw it saying 0.75%.
Yeah, it's pretty low.
Yeah.
You're lucky to get even
there
half
money
a
there?
percent.
Yes, it
You're
is.
lucky.
Wow.
So if you're going to save money, doesn't it make sense you want to know what's happening with that money?
Yeah,
Yes.
So-
absolutely.
So here's the rule. Here it is. Now, what we found over the last 80 years, CDs at a bank have averaged 3%. You're not going to get that now. They're probably about 0.3 or 0.75 in the CD. But over 80-year time period, you got 3%. So
Okay.
3 into 72 is 24 years. So now you know the rules of the game, so you can play the rules. So every 24 years, when Jeremy Jr. is 31, that 2,000 doubles to 4,000. Not fun, huh?
Oh,
That's pretty bad, isn't it?
It's not really that.
And just think, that's 3%. They're paying less than 1. 1 into 72 is 72
So
years.
they're not getting anything if they.
They're not getting anything.
Jeez.
But we've all been taught, if we need to save money, save it in a bank. Because that's what our parents did, that's what their parents did.
He just put it in a daggone coffee can.
Exactly, put it out back. But we keep it there 24 years later. He's 55 and has a whopping $8,000. That's pretty wet.
Sad.
Sad. Yeah, and you're not parents of the year, are you?
No,
Jeremy
that's not
Jr.'s not
impressive
really
at all.
happy. No.
Nope.
So, but there are areas we can get better rate of return. What if you can get 6% on your money? Do you think you get 6% out there?
Where would you get that at?
We actually, there's some vehicles, you can get them in bonds or different annuities. We actually have some with our companies we work with, we can guarantee people 6%,
Oh, I
which
like
is pretty
that.
neat. But 6 into 72 is 12 years. So again, we start learning what the rules of the money game is, then we can play that rule. Make sense?
Yeah.
So if you put Junior's money in there, that $2,000, every 12 years that money doubles. So at 19 he's got 4,000. At 31 he's got 8,000. All right. At 43 he's got 16, and at 55 he's got 32 grand. Now can he retire on that?
No.
Heck no.
He's still not happy, right? He's really crying now. So yeah. But what we found, if you ask most people where would they save money, the top answers are banks or credit unions, right?
True.
And if they're in a bank or credit union, they're either in a CD or a bond. You know, a lot of people have a 401k. They put them in the fixed or guaranteed portion. All right. And the worst place about most people don't realize is any kind of life insurance with a savings program. Now, Jeremy, where do you think, if you put money in a bank, what do you think a bank does with your money? Do you think they lock it up or they reinvest it?
On that, I mean, they put it into credit cards and stuff like that. I think
They invest it. You know?
Yeah, I mean, yeah.
What kind of rate of return you think they're getting on our money?
Well, if it's a credit card, I mean, it's a crap load of money.
Yeah.
It's like, what's ours? Like
26%.
Is it? Yeah, I mean, it's a lot.
18 to 29%.
Good God.
You know, that's what they're getting, but they're paying you what? Less than 1.
Right.
That doesn't seem fair, right?
Oh, no.
Not at all.
Now, I'm not saying you don't need a bank. You do, all right, but not for long-term savings. So what I love about Primerica is what we do is we want to show people how to get a better rate of return. What if you can get 12% out there? If you could get 12%, wouldn't you want to know?
Sure.
Yes.
Would you tell others?
Yeah, sure.
Sure.
You
Yeah.
would tell others. Okay. So watch what 12 does. 12 into 72, your money's doubling every 6 years. So let's start with Junior again. All right. Let's double it. Let's find out. What do you think? Let's take a guess. All right, Dorinda. No, I want you to work with me. So help Pat out here. Okay.
Okay.
All right. If we
Can
double
you do
it-
this, Pat?
Yes.
Yeah.
Okay.
If we double from 3 to 6, we got 32,000. What if we double to 6 again? What do you think we'd have at 55?
64.
64? Jeremy, higher or lower?
Yeah, it's gonna be a little more. I think it's gonna be like 112, maybe 100 and
Okay.
122, something like that.
122. All right. So why not this? Pat will give you the 122 and then keep the rest.
All right, Pat. Wait a minute.
She'll keep the rest.
Wait a minute.
Wait a minute.
So watch this. 12 into 72, your money doubles what? Every 6 years. All right. So at 13, we got what? 4,000. All right. At 19, we got 8,000. At 25, we got 16,000. At 31, we got 32 grand. All right. So we got the same money in half the time. Now watch the doubling. All right. At 37, we got 64,000. There's your 64.
Ah.
At 43, that 64 doubles to 128. Let me put the zeros back in. I like that. You know. At 49, that doubles to $250,000. And at 55, your son has $500,000.
Oh.
He is very happy.
Yeah.
I guess
Happy.
we get Parents of the Year then,
You get
right?
parents of the year,
Yes.
yeah.
You get an award too, right?
Isn't that neat? Now here's the key. How much should we invest?
$2,000.
How many times?
Just
Once.
once, yeah.
What if he waited 6 more years, guys? From 55 to 61. That $500,000 would double to what?
Over a million, yeah.
And you just changed your family tree.
Wow.
And we can get 12%.
There's 12% out there. I'll show you that in a second.
Okay.
So what this is why Pat's so excited. This is why we need people to get out there, okay, and share that with them. Now let me ask you this. I know you had some interest when we talked before we started the presentation. If you could help take people from this 3 to 6% and earn a higher rate of return and get paid doing that, would that interest you?
I mean, I think that'd be something you could do. I mean, I'm a truck driver. I mean,
Okay.
that's, you know what I mean? I don't know if I could do this or...
Well, we have a lot of truck drivers that are very successful with us, you know. But
I mean,
that's
I'd
up
like
to
to
you.
get paid. I'd like to
I
get
would
paid.
have no time for that.
Yeah. So one of the things that I ask you, what are you guys doing for retirement right now? What are you doing for retirement? What do you got, Jeremy? Do you have,
I ain't got jack, man.
no?
I was hoping when I had that business I told you about that I would build that into something, but since I had to go back and drive for other people, I don't have retirement.
No? Okay. So we know we need to do something, right?
Yeah.
Yeah.
I don't want.
We're not getting any
I
younger.
don't want to fish someday. I don't want. I don't want to work the rest of my life.
Yeah. Dorinda, what do you have?
I have a 401k at work.
401k?
Yes.
How long have you been at that work again? I'm sorry.
Oh, 8 years now.
8 years? Yeah. Do you understand how that 401k works?
No, I haven't had. They just switched it over to something new, and I wasn't there the day they did the talk about it. So no, I really don't know about it right now.
Do you participate in it?
Yes, I do actually.
Well, that's good. That's the first step, getting in it. You know.
Yes.
Do they match? Do you know if they match? or not?
It's real low. They changed so many things, and now it's no, they don't.
No?
Actually, now that I remember.
They don't, so they stopped. A lot of
stopped.
companies are
They
doing
stopped.
that. You know,
They
you
did.
go. So the biggest area we deal is in the investment field, guys. You know,
Okay.
and we can start an investment as little as $25 a month. So we're not like a Merrill Lynch where you better have 4 or 5 zeros at the end of that.
Okay.
So where you need $250,000 to invest. But we know if we can start out small, we can create the habit of saving and investing. Make sense?
Yes.
Sure.
And one of the biggest areas we deal in is what we call mutual funds. All right, Jeremy, you understand how they work?
I mean, it's like some stocks and stuff, I guess. I mean, you buy some stocks or something.
Yeah, you're close. There's two ends of the spectrum of investing. All right, you have stocks, and then you have mutual funds. All right. Now, stock is if you own. What's your favorite store at Christiana Mall? What's your favorite?
Well, up at Christiana?
Yeah.
I like, what's that, Cabela's?
Cabela's,
Yeah,
right.
I like the bookstore too, I gotta admit.
Yeah. So say you put that $2,000 in Cabela's, and you bought stock. You're part owner of the stock.
That'd be nice.
So it would be good. So if Cabela's does pretty good, you make money.
Darn right.
But what happens to that $2,000 if Cabela's goes out of business?
Guess my money be gone,
It'll
wouldn't
be
it?
gone
Yeah.
forever, right? It's
Oh, yeah.
gone for good.
Yeah.
You know? Now, mutual fund is like owning the mall. All right. So would you rather have all your money in one store or a little bit of money in a lot of stores?
Oh, in all the stores.
In all the stores. So you're investing in hundreds of different companies.
Okay.
You know, some do good, some do bad. But if you own Cabela's and they went out of business and you were that mall manager, would you shut them all down?
Oh, no.
And what would you do?
They just rent the store out to someone else.
Someone else.
Yeah.
And that's how mutual fund managers are.
Huh.
If they don't like the company and it's not performing well, they replace it.
I
know?
gotcha. Okay.
And they've been around since 1924 and never, ever, ever has a mutual fund gone out of business.
Wow.
They virtually can't. The only way is if all the companies investing go out of business the same day.
So hundreds of companies would have to go
Yeah.
out the same
And
way.
you're an asset.
That's-
Microsoft, Walmart, McDonald's, Bank of America, Ford, General Motors, General Electric, they're not going out of business the same day.
No,
No,
no.
they
You
won't.
know, so, but I want to share something with you, Dorinda. You said that your 401k doesn't match.
No.
You guys ever hear of something called a Roth IRA?
That was the name for the guy that used to be in Congress from here. And
Bill Roth.
Yeah, yeah.
Mm-hmm.
I've heard of that. I've heard of
I
that.
met him a long, long, long time ago when I was a bartender before I got into Primerica. I never knew it. He
You were a
came-
mixologist?
Yeah, I was a mixologist. He came to my bar. I said, that was Senator Roth. So now I have a personal attachment. I forget what he was drinking, whiskey on the rocks or something like that. But this is probably a key. Remember, this is when I talk about a 401k or a Roth. They are not investments. All they are tax codes. It's what you invest in. You have investments through 401k, right?
Correct.
Who managed that? Do you know? Is it
Oh,
Fidelity, T. Rowe Price, Vanguard?
Vanguard sounds familiar.
Vanguard. So you have different investment choices in there.
Yeah.
Same thing with a Roth. You could have different investment choices in there. But this is why we believe everybody should be in one. Let me show you the 4 benefits. One, you can invest up to $5,500 a year, Jeremy, if you're under 50, and I know you are. And when you get over 50, you can add another 1,000 to that, so $6,500 a year. Which is a lot of money. That's over $500 a
You
month.
gotta have that
Yeah.
5,500 first there. right?
Exactly.
I mean,
Yeah, you do.
that's-
But you
yeah.
can start as little as what?
25.
You're right.
$25
You're
a
right
month,
about that.
Number 2 is it's after tax money going in, so you don't get a tax deduction. There are no tax deductions. So
Okay.
like when you put money in that 401k, you're getting to write that off your taxes. Make
Alright.
sense?
Yeah.
So you're getting the tax savings now, but the challenge with the 401k, when you withdraw that money, you got to pay taxes on it.
So you pay on more.
Yeah, but they say the older you get, the less taxes you are.
Okay.
But
But you're still
do
paying.
you know what your tax rate will be when you're 65, 72?
No.
Right. So, you want to know. The
Right.
third is, one of the nice things about it, your money grows tax deferred. So you don't pay taxes on the growth, over the years. So you can defer the
Well,
taxes.
you already
Oh, I
pay
like
taxes
that.
like at the beginning.
Yeah, but whatever the growth is, in a
Oh,
bank.
so you don't pay it on the new money.
Correct.
Okay.
And number 4 is when you withdraw the money, all right, after 50, which you can start after 59 and a half or 5 years, whichever is greater, you pay 0 taxes.
Oh, I like that.
So let me show you this. Remember that rule of 72?
Mm-hmm.
Just say it was you put $2,000 in,
Right.
all right? So you paid taxes on that $2,000.
Right.
if you're 25% tax bracket, you paid $500 in taxes. And that grew to $500,000. You could withdraw the $500,000 and pay 0 taxes.
Really?
Wow.
Don't you think everybody should know that?
Absolutely.
Yeah.
They should, okay? So that's what we want to help people with. You know, we want to help them in investment. That's what Pat's so excited about. One, everybody needs to know that we can only do so much. You know, we need more people. You know, that's why we need the green cards. Make sense?
Yes,
Yeah,
that makes
absolutely.
sense.
So if we could show you another alternative to a 401k or something that would be more beneficial to you guys in the long run, wouldn't you want to know about it?
I
Oh,
sure
absolutely.
do.
Sure
oh,
do.
I do.
Yeah.
You know, now if we go around asking people, you know, do they have money to invest? What do you think most people are going to say?
Oh, well, I know I don't.
Yeah.
So, I mean, I know that's probably what they say.
Yeah. So here's our rule 72. Let me ask you this question: how do you win a game if you don't know the rules?
You know, when.
You don't win. And do banks or insurance companies have any incentive to teach us this rule?
No.
Probably
No.
They
not.
don't want
Actually.
us to know.
Now I'm asking is, you know, I'm sure you know people that could benefit from this.
Mm-hmm.
You know, and
Your
that's
sister's one of
Everybody
them.
I
She
know.
needs that.
Yes, she
Yeah.
does.
And here's our: if you
Your
don't
aunts.
introduce this to your family and friends, how will they ever learn the rule 72? That's why Pat wanted to bring it to you guys.
I'm so glad she did. Thank you, Pat.
Yeah, that's cool.
She's awesome. So watch this. One of the first steps to financial security or financial success is pay yourself first. We've all heard of that, right?
Right.
Yeah. Challenges most of us,
Don't.
unfortunately, don't. You know. But watch this. If you know, when you were 27, all right, you know, you're
I remember
a couple
that.
years
Oh,
close
yeah,
to that
yeah.
right now. So if you put $100 a month in, 25 a week, that's $12.50 each a week. You know, and for the next 40 years, and average only 9%, that's almost $500,000. Why didn't they teach us this in high school, right?
Did you
Right.
hear he said $12.50 a week, though? That's pretty sad.
We blow that on
Yeah,
in
I
a
mean,
day.
that's coffee.
And that Pepsi right there, probably.
You're right about that.
Yeah. So what? But see, most of us don't think about investing. We kind of wait.
No.
So if we waited, look at this. If we just waited 5 years, which we're thinking $100 a month for 5 years, which is 60 months, 60 times 100, we think that's only 6,000. But the challenge is it's the doubling effect that comes off the tail end. So we would have lost out on 175 grand. That 6,000 cost us 175 grand. But most of us still don't think about retirement at 32. When do we think about it? At
Oh,
42.
yes. You're right.
And that same $100 would be 112,000. That's why most people retire and have to go back
Now,
to
you
work.
said I could ask a lot of questions, right?
Yes.
For you, Pat.
Yep.
So, my question is this: what you teach is retirement. I mean, I'm somewhere in this neighborhood right
Yes,
here,
sir.
and I don't have any. I mean, you have a way for people like me to save money.
Exactly.
They get called up.
Yeah, we'll find out. You know, we'll find you the money. That's our first goal.
Okay.
In finding you the money. So, but again, the first step is what you have to start.
True.
You know, and you're never too late to start because half a sandwich is better than no sandwich.
That's
right?
that's a fact.
That's
Yep.
a fact.
Yep.
So that's exciting. But one of the biggest things that stops people from investing, and you guys said it earlier, is debt.
Yes.
You know, and man, Primerica, we want to revolutionize the middle market's ability to eliminate debt and control their finance. We want to get it out. You know, we don't like the credit card industry. We want to put them out of business because they're killing people. You know, they're killing people. Now, Pat can do this right now. She's certified in our debt programs. We actually have 6 different programs. So let me show you one of them, a client we just helped. And this is similar to a client right near our office. You know, Jeremy, they had $30,000 of credit card debt. You know, the average interest rate, because they kept on paying it late, was 18%, and they were supposed to pay $1,200, so they were having challenges, and their
Okay.
credit was shot. Their credit was poor. It was going
I
downhill.
bet so with that much money.
So when we did an analysis with them, and we showed them it would take them 36 years to pay it off. Is that unbelievable? And you would pay back 117 grand for 30,000. That's over 3 times as much, just in interest.
I'd be dead by the time 36 years
Yeah.
go by.
Yeah, or the stress would kill you, wouldn't
Yeah.
it?
Right.
You know? So
Absolutely.
one of our companies is called Freedom Financial Network. You know, and because of their situation here, which was pretty tough, pretty hard for them, and they were behind a lot, we did a debt settlement.
Okay.
Okay, so we Freedom settled on their debt. Instead of 30,000, it was 15,000. They get paid, Freedom Financial, they got paid their fee of 6,300. So the total debt that this couple had to pay back was $21,300,
So, I mean, that's including the fee, though.
cleaning everything. And so we set them up on 3-year payment of $590. Now let me ask you this, Dorinda, would you rather pay back $21,000 or $117?
Oh, the 21,000, absolutely.
Jeremy, you got to pay $590 or $1,200.
Oh, the 590 for sure.
Be
Yep.
in debt 3 years or 36.
Oh, no, I mean, it's got to be the 3 years.
Absolutely.
Yeah.
So this is exciting because we saved them $610 a month. Do they like us or like us?
Oh,
Love
they
it.
love you.
They love you.
Yeah.
What do you think we told them to do with the 610?
Well, I'm going to bet that's probably where you found some
Exactly.
of that money from.
Yeah.
That's,
Did we pull any money out of their pocket?
well, they were already paying somebody else, it looks like, so.
So it's better to pay themselves.
Yep.
Yeah, there you go.
Isn't that neat? You know, so if we could help you guys get out of debt 5 to 10 years sooner and put money back in your pocket, is there any reason you want to look at that?
Yeah, absolutely.
I'm sure I do.
Absolutely.
That'd be good.
I do.
All right, so we'll talk about that in a little bit. Now, the last part I want to show you, what do you think is your greatest, what would you guys say your guys' greatest financial asset is?
I know what it is. It's this house we live in.
Would you agree with that? The
Yeah, I
house.
agree.
Yeah.
House.
We worked
So-
hard for this.
You know,
Yes, yeah.
when was your last vacation, guys?
When was our last vacation?
At least 3 years ago.
Yeah.
3 years ago. Where'd you
Yes.
Well, it really wasn't that much. I mean, we drove down to visit some in-laws. So
go?
it
In
was
Williamsburg.
Yeah, it was kind of. I think it was North Carolina.
Where would you guys go on vacation?
Where would we like to go?
Yeah, that's a whole nother story.
Probably a cruise or
Cruise.
something.
Yeah.
So say you're going on a cruise,
Mhm.
right? And then a freak tornado came by here in Delaware and wiped out your house. Do you want to replace 100% of your house or 50% of your house?
All of it.
All
All
of
of
it.
it. You know, makes sense, right?
Right, right.
So, all right, and say if something happened to you guys both and you weren't able to work for the next 3 years, would you be able to keep the house?
For 3 years?
3
we
years.
couldn't. No. No, I'm sure of that.
No.
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 No. So really it's kind of a trick question. Your greatest financial asset isn't the house, it's actually you. Or your ability to provide income to
Okay.
pay for
Oh,
the
to
house.
pay. Okay, that's what
That
the
makes
3
sense.
years. Okay,
Yeah.
okay,
That makes
okay.
sense.
So let me ask you this, you know, Dorinda, if something happened, God forbid if something happened to Jeremy, do you want to replace 100% of his income or 50%?
Oh, I'd have to have 100%.
100%. And Jeremy, the vice versa. If something happened to Dorinda, do you want to replace 100% or 50 or 200? No.
Well, I mean, she does have a credit card, but you know, so no. I mean, I'd have to have. I hate to say this, because our situation, I'd have to have it all. I mean,
You have to have it all.
We
you know.
depend on each
We
other.
depend on each other.
Yeah.
So what we want to teach people is we call the Property Protect part of our mission statement is income protection. We want to teach you how to protect your income. The industry calls it life insurance.
Oh,
Okay? So watch this. If you guys had a money machine in the corner of your house over there, okay? And that
I
money
wouldn't go on
machine,
that vacation.
right? If that money machine spit out $1,000 every Friday, 5 o'clock on Friday, would you make sure it's working?
Oh yeah,
Yes.
darn right.
Would you buy a generator in case electric goes out and it stays working?
Darn
yes.
right.
You
Yep.
buy a backup generator to the generator.
Yeah.
yes.
Would you put a maintenance plan on it?
If I could get
Of
one,
course.
absolutely.
Definitely. All right. So now here comes a tough question. If the maintenance plan costs $100 and it's the 31st of the month, and all you had was $100 and you had to pay either the maintenance plan or the cable and internet, because I know you're a football fan. I know you're everything.
Yeah.
What would you pay, the maintenance plan or the cable or internet?
Maintenance plan.
Hey,
for me.
we'd have to pay the maintenance plan. Yeah, I mean, it's
Yeah.
spending out that money. You know.
That's what everybody says to me, but we will find it out.
really.
Yeah. So watch this. When you talk about income protection, this is what we have. Say, Jeremy, you're making $50,000. All right. We teach people you need 8 to 10 times your salary in life insurance. So you need about $500,000 in life insurance. All right. So God forbid if something happened to you, you know, Dorinda, you can invest that $500,000. You know, we could probably show you how to earn 10% on that. So you withdraw. You know, you have that interest bearing. So that would be $50,000 a year of interest you're earning. You know. So in a sense, we're replacing the money machine. We can't replace
That's where
Jeremy.
the income protection part comes.
Yep.
Okay, I get it.
I
We
see.
can't replace Jeremy, but we can replace the
I
income.
see. I see.
You know.
Okay.
So you mentioned earlier about your life insurance. You said, what kind of life insurance do you have?
It's I listen. I bought it from like a second cousin type of deal,
Uh-huh.
and I know some of it's supposed to be invested or savings or something.
So it's
I know.
insurance with a savings program?
Some type, yeah, something like that. Yep.
Do you know what you're paying on it?
It's yeah, unfortunately I do, because it's like two policies in one or something, and one's 170 and the other one's like 120. It's like $300. Is what it is.
$300,
Yeah.
Do you have the policy here? Because that would help Pat in her training. Do you have it, or?
I don't, man. It's somewhere, buddy, but I don't. I mean, I don't know.
Okay.
I don't know.
Yeah. Pat, you want to help him find? No, I'm just kidding. But, this would be helpful.
She can do it. Go ahead.
Yeah. So we have $300. You know the coverage amount? Is there any, do you know
I think
It wasn't much.
no, it's
It
like
wasn't.
50. I mean, I remember.
It was 75.
Was it 50 or 75? Because I remember like my grandmother died and her funeral was like around 25, and I wouldn't have it. That's what I thought of life insurance for.
Just burial.
Just burial.
That's what it used to be. But now, it's a whole lot more because we've never been
Okay.
taught income protection. Now, you
never
just
had
said you had it at work, right?
Yes, I do.
Do you know, is it one time your salary, or do you?
Oh, it's only one time my salary. They didn't offer.
They don't offer extra, or
They
you don't
didn't.
know? Or?
Well, they changed it. They just recently made a change. I used to have, increase, but now they've got new management, so now that my benefits are less now than what they were.
Wow.
So it's only 1 year now.
Yeah. So let me ask you this: when a responsible family like yours only has life insurance at work, right? It's usually because of 3 reasons. 1, you didn't see a need for it. 2, you couldn't afford it. Or 3, you never got around to it. Well, why don't you have it outside of work?
Well, I would say for myself, I didn't see a need for it in the way that you explained it, and then I've never really gotten around to exploring any other options.
Life is too busy, isn't it?
Yes, it's very busy.
Yeah. So
But I can already tell you that I can't afford what I'm already paying for.
you can't afford it.
I mean, there's months I pay late. You know.
I can understand that. So let me show you this chart. There's 2 types of life insurance, all right? There's cash value life insurance, which is an insurance in a savings program. They sell it as almost 3 things. You can have life insurance. It builds an emergency cash. Remember we talked about that.
Yes.
And you can use it for retirement.
I recognize that word right there.
Universal life.
Yeah.
And then there's term insurance, which is basic insurance for a specific amount of time. And at the end of that time, you have the option to renew it. What do you think most people have? Cash value or term? What would you guess?
Well, people like to save money. I would guess that they probably have cash value.
About 85% of people do have this. So let me show you how it works. All right. So you see here, this is John and Mary. They're 35, 33. They had $150,000 each, and the premium, was $298 a month. I mean, you're paying a lot more. So we'll look at that.
Wow.
But out of that $300 a month, some money goes toward insurance. Some money goes toward what they call the cash value. The challenge is, out of that $298, you don't know how much is going toward what.
True.
Make sense?
That makes
You're paying
sense.
$300. You don't know how much is going toward
I don't know
your
jack
investment
about
or
it.
anything,
I mean, honestly, I don't know anything about
And
it.
that puts who in control? You or them?
No, I guess it's them.
Yeah.
You know.
Now here's the challenge, because I owned it and Pat owned it too, until we read the policy and to find out about it. Here's what they don't tell you. The first thing here is, if you came out here and say this is John and you're Mary, all right, and you had $20,000 in your cash value, okay, and God forbid something happens to John, he got recruited by God early, all right.
Okay.
They would go back to Mary and say, we got 150,000 or 20,000. Which one do you want?
Well, wait a minute. I thought that was their money.
It was supposed to be their money. Yep. That's how they sell it.
So
Really?
they get 170,000?
That's what we would all think, wouldn't we?
Right.
But they don't. So in fact, the number one challenge with it is you lose your cash value when you die on about 96% of them. There are some you get both, but the premium is actually double.
Wow.
So you think that's fair?
No.
No, not at all.
Not at all. Second is, they told you could what? You could use the money, right?
Well, I think we borrowed against one of those.
You borrowed it.
Yeah, that was
Yeah.
a long time
So
ago.
there's a key word right there, borrow. If you have to borrow something, then what do you got to do what?
You got to pay it back.
So it's like this, if you borrowed my pen, you'd have to what?
I would give it back to you.
Whose pen was it?
Yours.
It's your pen. That's
Mine.
right.
If you borrow money, you have to what?
Pay it back.
With?
Interest.
Interest if it's a loan, yeah.
Did you ever pay yourself back with interest?
No.
No.
No. So
That doesn't
so
make
watch
sense.
this. they sell it too. You might need 20,000 for junior to go into college. So you borrowed at 20,000, and they say it's at a low rate, 6%, which that's $1,200 a year you're paying in interest, plus your premium, right? And then God forbid someone died, they go back to the beneficiary, say we have 150,000, but time out, we have an outstanding loan. So deduct what you borrowed plus the interest. Do you think that's fair?
No.
No, not at all.
No. Would you have bought the policy if you knew that?
Not at all.
Yeah.
No.
That's why we need you to find it so we can show you in the policy. You don't have to believe a word I'm saying, but if you're like me and Pat, we read it in our policies, and now we don't own it anymore.
I'll go get that in a minute.
Yeah.
I'll find that.
You'll find out.
Yeah.
So let me show you. You want to know a different option or a different strategy, right? We call it.
I don't want that.
Yeah,
No.
we call it buy term and invest the difference. All right, so watch this. So with term insurance, you can get a lot more coverage for less money. So in this case, instead of 150,000, which you guys know you're highly underinsured right now, we gave this couple 300,000 each for 123.
Wow.
Now let me ask you this, Dorinda, if you were married and something happened to John, do you want 150,000 or 300,000?
Well, I would need the 300,000.
300,000.
Be careful showing her too much on me.
Yeah, I will. Yeah, I will.
Yeah, we can increase that
I knew she'd say that.
600,000.
600,000, right?
But Jeremy, would you want us to pay 298 or 123?
Oh, 123. There's no doubt. I mean, that's a no-brainer.
So we saved them $175.
Okay.
What do you think we told them to do with the savings?
Well, it says it right,
Right there.
there. Right there. You're going
Invest.
to invest it,
Our
yeah.
business isn't that difficult. That's why, Dorinda, you could do this. It's just with a
Wow.
little training. The industry makes it complex. Primerica makes it very, in layman's terms, very simple process.
Okay.
We want to keep finances easy to understand. The industry keeps it complex. They keep us in the dark. They make all the money.
That's a fact.
So if you invested 175 and you average 9%, not even the 12 we talked about, by the time you're age 70, you have 518,000.
Oh, I like that.
Now let me ask you
Yeah,
this.
but you do.
Now let me ask you this question, guys. If you had an investment, and you had insurance over here, God forbid you died, you get the insurance,
Right.
and you also get your investment.
Oh, yes.
Okay. If you take money out of an investment, do you have to borrow it? Your own investment.
That's your
That's
money there.
awesome.
Yeah.
That's good. Now here's the key, Jeremy. If you had 500,000 at age 70, would you really need the 300,000?
I know I was joking a minute ago. I wouldn't need it, but I probably would keep it.
Why would you keep it?
Well, I mean, I just want her to have enough money. I mean, I'm serious about that.
Yeah.
Because that'd be the right thing to do, I think.
It might. I'll show you something. But here's the real key to this. All right. If you guys owned an insurance company, own one,
Okay.
and someone dies, one of your clients died, do you want to pay a 300,000 or 150? What do you want to pay out?
Well, if I'm the company, I won't pay
Okay,
150.
Do you
Right.
want to collect 123 or 298?
Well, I want to come in
298.
business. I want to collect the most money.
That's why they never show you this.
So you mean I could have probably bought that other stuff there too?
Yeah.
Wow.
That's some crap.
We need
So
to get rid of the
if
crap.
if we could give you more coverage, or the correct coverage, and it fit within your budget, is there any reason you wouldn't put that into place?
Absolutely
I
not.
don't know. I'm interested in that.
Yeah.
Indeed.
I am too.
But how long do you think people should have life insurance?
Well, I mean, I didn't know this before, but based on what you showed me there, I mean, I would say until they're basically self-insured, if they're saving money right.
How long do you think the insurance company wants you to keep it?
Well, it says it right
Until they're
there.
done.
Until they're done. So we want to
Right.
teach people this, what we call the theory of decreasing responsibility. See now, guys, today you got young kids, a high debt, and you got a mortgage, so loss of income would be what?
No, devastating.
Devastating. So the green line represents insurance. So we want to make sure you're properly protected with the right amount of insurance for the least amount of dollars. And that's
Okay.
term insurance. But you don't need it forever. At the same time, though, you need to have an investment outside of insurance where you two can control it, not the insurance company. We either invest in a Roth IRA, or you're self-employed. We create what we call as a SEP IRA, which
Okay.
we'll teach you about. But think about it. Junior's 7. Think 20 years down the road. He's 27.
Yeah.
He's out of the house, right?
Oh, yeah.
He's not
Yeah,
coming
well,
back, right?
yeah.
He's out.
So,
Yep.
so what we teach, as you get closer to retirement, children are growing lower debt. We'll teach you how to get out of debt in get your mortgage paid off, you need what?
We're gonna need some money to live on, that's
Yeah,
right.
retirement income.
Yep.
So as these responsibilities change, we slowly decrease your insurance only when your investment increases. You know,
Okay.
so if your insurance needs are, you know, $500,000 and you had $500,000 saved, you really don't need the life insurance. So you can stop the life insurance and take that money you were paying for the life insurance and add it to your investment.
That's why you asked me that question.
Exactly.
Okay.
Yeah.
I get
So
it.
listen to this. This is, you'll think this is really neat. What life insurance company do you know that teaches people how to eliminate the need for life insurance?
Not the one I'm,
I've never heard
not the
that
one I'm
before.
working with, that's
Yeah.
for sure.
And that's what Primerica Life does. That's what
Yeah.
our life insurance company does.
Gotcha.
Yeah. Another area of insurance we help people is with car insurance. You know people that drive a car, right?
Yes.
Yeah. So you know, you have car insurance,
Right.
right? Yeah. So we have a brokerage firm called Answer Financial. You know, Pat can help people in this area too. We deal with 15 to 20 carriers, and we make one phone call and we try and save people money. I mean, we're using companies like Progressive, Traveler, Safeco, 21st Century, E-Insurance. You know, our goal is ways to find you money. You know, so this couple, look, we saved them $65 a month on their car insurance. Now, if you guys could get the same amount of coverage and save
Right.
$65, wouldn't you do it?
Oh,
Sure,
absolutely.
absolutely.
Now, guess what we told them to do with $65?
Pay for my football practice.
Yeah, that's a nice one. Yeah, no, but if you invested that in 20 years, you'd have $43,000 for
Oh,
college.
wow.
College is expensive, so we need to save money.
Sure.
You know?
Absolutely.
So we teach people what? The more you what? Save, the
save.
more
The
you
more
can
you
invest.
invest.
You know? And the last thing is, let me wrap up with this. And people don't plan to fail, they just fail to plan. The traditional financial institutions sell you products, right? They never provide you with a total solution. So here's where most people are, and you got money going in every different direction. You ever sit down together and say, we make okay money, I just don't know where it all goes?
Yeah.
Yeah.
We have.
So,
Yes, we
yeah.
have.
Yeah, but true financial planning, all these have to talk to each other. I can't talk to you about investing and saving for retirement if you're in debt up to here. We got to handle both. And we're the only company that deals in all of the areas. So what Pat and I want to do for you, we take people through what we call as a financial needs analysis. It's customized. Your goals and dreams are different than everybody else's. It's confidential because that's just a relationship between me and you. We have a doctor-patient relationship. But what puts us in about 40,000 homes a month? We do it for free. So we want to put your goals and dreams on paper. We call it a financial GPS. Now, let me show you this real quick. So this is what it is. You know, what we'll do for you. Pat went through hers. She's excited about it, right, Pat?
Yes.
Now, we want to give you a blueprint for financial security. You want to be financially secure, right?
Sure.
Yes.
Yep.
So we want to teach you 4 areas of money management: protection, debt, savings, and income management. All right. We got to start where we stand, right?
Yes,
You know,
we do.
I mean, you're learning a lot today, and some people, you know, just aren't happy with it. Don't beat yourself up. We just weren't educated.
True.
You know, so we want to figure out what do you got coming in, where's it going, you know, what do you income manage expenses, what do you own, your assets, what do you owe, your liabilities, and the difference is their net worth. So Jeremy, let me ask you this: if we can help you increase your net worth by helping you find ways to better manage your cash flow, would you be interested?
Oh, yeah, absolutely.
Makes
yes.
sense.
Yep.
The first key is retirement. All right, you want to retire, right? Someday.
do,
Yeah,
yes.
and it can't be tomorrow, but unfortunately,
Right
it
now,
would be
it can't
nice.
be.
Yeah, but retirement, would you agree, is not an age; it's just amount of money.
That's true.
Sure.
It is.
If you had enough money, you could retire today.
Yes,
Yeah, I
I
wouldn't
would.
go back if I had enough money today.
Right. So what we look at, though, we do look at the age, you know, during this. So we ask what age you like to retire realistically, and how much you want to retire with. Okay, and then we calculate it with inflation, and we figure out what we call your financial independence number. So this
Okay.
couple want to retire at 67 with about 5,000 coming in. To get there, they need $711,000. That's what we call their financial independence number. Make sense? And then we work at back today. That's what we call the good news and the bad news.
Okay.
The good news is, you know, you need 711,000.
Okay.
The bad news is now you know exactly. You know?
Now we got to work on that.
You got to
Yeah,
work
no
on
doubt.
it, right? So
Okay.
our job is to find the 184. So we cover about 3 or 4 pages. We'll teach you all about investments. This
Okay.
is our debt page. We want to map out your debt, kind of like before Primerica and after. Like
Right.
this couple, we showed them they had a mortgage, couple credit cards. They'd be in debt to 2035. We got them out of debt in 2019. And
Wow.
we saved them
okay.
125,000. Imagine that, saving 125
Wow.
grand.
I want to do that.
That'd be
Yeah,
awesome,
for
you know.
real.
We deal in education plans. You guys, I know you have a couple kids. There are 4 ways you can save for college and get a tax benefit.
Didn't know that.
We'll-
I heard of one through
You heard
my
of-
job.
Do
Yeah.
your job. We'll teach you all 4. We'll
Okay.
cover that. We talk about going on that cruise you want to do. You know?
Yes.
This is the insurance, but the different areas of insurance. But we want to figure out exactly what you need. We don't want to overinsure you. We don't want to underinsure you.
Right. Just
And then we'll show you how to get out of it.
What
down the
about
road.
that other money in that thing? I mean, will I get that back?
Save.
We'll show you how to rescue that out.
Okay.
That's our goal. Whatever you have to pay there, we'll help you rescue that out.
Okay.
Okay.
That's why it's important to get the policies.
Okay.
And then we put it back all in your numbers here, and we build your own financial secure house. Make sense?
Makes sense.
We have 21 ways to find you between 200 and 2,000 per month. Okay.
Cool.
So any questions, comments, or concerns? Anything?
No.
No, I mean, I don't think
That's
so.
a lot of information to process.
Yeah,
we got
I mean,
a lot
my
to
head
talk
is-
about.
Yeah.
My
Well, let me
head's
do
It's
this.
been great.
Yeah, let me take a few minutes and start. You're on your way to figuring that out. What age, Jeremy, would you like to retire? Realistically.
45? No, no. I mean, I'd like to retire at 65, like
Most people.
we were told,
How
the
much-
dream.
The dream. How much do you think you guys need in today's dollars to retire? Now, I think the kids are grown. You don't need. We'll get you depending on your mortgage. You might need a mortgage payment. You might not. How much do you need per month?
I mean, it'd be nice to have the same amount, but I guess if the house is paid off, I wouldn't need quite as much.
Right.
Maybe half or 3/4 or something like that. I don't know.
All right, team. So we're collecting data, and a lot of times you can get at least the gist of the data, the retirement, the insurance, the debt. You can communicate after the appointment to get them to fax you pay stubs and things like that. So we'll be wrapping up. We're going to act like we collected most of the data, and then we're wrapping up into the commitment parts of it. So guys, man, we got a lot of the data. Thanks for giving me this. Let me ask. Let me just review, make sure we got it. So let me think of it. So, one of the questions, I know we're going to help you find some money. One of the areas is your tax refund. The other is insurance. And we're going to see if we can save you money in your car insurance. I know we can show you ways to get out of debt. So, how much do you think you guys can free up monthly to help you reach your goals and dreams? We found that some families can do that are on a fixed budget, or some families can do about 100, 150 a month. Others on a fixed and limited budget can do an extra 50 to 100 a month, and some are fortunate enough to do 200 to 250 a month. What would fit you guys? What could you do? 50 to 100, 100 to 150, or 200 to 250?
I'm thinking maybe the 50 to 100. I don't know. What do you think?
Yeah, I think right now that's the realistic amount.
Yeah, I mean.
So is it 50 or is it
that'd be a
100, or you
stretch.
want
I
to
would
split the
say
difference?
100 at the most.
I'd say 100. Yeah, we could probably do
manage.
100.
So are you sure? I mean, if things got tight, could you write yourself a check each month for $100?
Well, I mean, I think I could find $100 around the farm somewhere.
Okay.
You know what I mean?
Every
So,
month?
Yes.
Probably, yeah.
Okay.
Yeah.
So great. And then Pat says we can get back together. Next Monday. Is that good?
Sure.
Next Monday, same
Yes,
time,
that's
same
fine.
Pat channel.
Yeah.
I know. Can
a
you
good
Can you email me those pay stubs?
Sure,
That
I
you said.
can.
I know it's all electronic. You get paid. You can
Yes,
email
I
me.
can do that.
Yeah. So let me wrap up with this. Here's one of our commitments. When I come back, if Pat and if we can show you a plan that is better for you in every way, and you be the sole judge of it, is there any reason we couldn't do business?
Not at all. No, we could. We could do
I'm in
business.
agreement.
You know?
Yeah.
So,
Good.
I mean, I know like on the life insurance, you said if we could have a program that fit within your budget, you put it into place.
Absolutely.
Sure.
So
Yes,
we'll do
we
the
will.
paperwork, write checks. Is that okay?
Yeah.
Okay.
Yep.
The second part is this. We ask that you recommend 10 people like yourself who ought to hear about our company concepts. They, of course, will make up their own mind. Is that fair enough?
Yes, sure.
Good. Let me show you how it works, all right? You have an address book, or you keep most people in your cell phone, or is that the rule?
Who keeps an address?
Yeah, I know. I'm with you. So
My mother.
your mother. So let me show you how this works. All right, this is what we call our memory jogger. All right, what we're going to do is we're going to merely list them now. 10
Okay.
people 10 people like yourself, married, homeowners, and kids, and then I'll leave the sheet with you guys.
Okay.
And then when Pat and I come back, if you like the plan, you can give the referrals to Pat. If you don't like the plan, you can give it to your bulldog there, Ralph. Yeah. So why don't you? Now, how do you keep your names? First name or last name? How do you keep them in your contacts?
Just
I
kind
do
of
first
randomly
name.
put them in, I think.
Yeah, randomly.
I have
So
to
let's
look
scroll
more
down, Dorinda. Why don't we scroll down to the S's?
Okay.
Right? So tell me the first person there that's like yourself, married, homeowners, and kids.
Sarah Hurst.
Sarah Hurst?
Yes.
All right, Sarah. Now, Sarah's married, have kids?
Yes.
She's married. Hey, Jeremy, who you got?
I got Sean Maxwell.
Sean Maxwell. He's
Yeah.
married, has kids?
No, he's another. He's a bachelor. Works with us over to the.
Okay, we'll skip Sean, but let's focus on people that are you're married to kids and homeowners like you, or maybe a
Right.
single parent like you. Who's next one there?
Well, the next one that's married would be this Stephen Jones.
Stephen Jones.
Yep.
All right, keep going. Any more S's?
Nah, I'm kind of into the T's now.
Let's go to the T's. Then.
I got Tom Maxwell. That's the other guy's dad.
Okay, Tom. Let's
Yeah.
do Tom.
Yeah. He's married.
Dorinda.
Sherry Mullen.
Sherry Mullen. Got her. Who else?
I hear somebody needs. It's good. This guy Tim. He's always talking about how he's got a bunch of debt. So
Yeah.
maybe you should talk to him. He's got a wife and kids. I think she's wise in debt. So,
Yeah, so, okay, let's do Tim.
Timothy.
So, team, we listed 10, and then, all right, so now what I'm going to do is I'm going to leave this with you. Now, I got some homework on it because we're going to put about 6 to 10 hours of our work in there. We're going to ask you if you wouldn't mind doing some. Right here, we just got the names. So, if you wouldn't mind, take the names and put them here. And if you have their address, put their address. If you just know what town they live in, that'd be great, and their cell phone, and fill this out for you. If you have some more, we'll come there. I don't want you to talk to them because you won't know what to tell them. Because until we come back, you need to see what's there for you. And when we come back, I'll give you.
Well, you might not get them.
Yeah,
What you said.
Yeah. So, and when I come back, if you like it, I'll text you something that you can text out to them.
Okay.
So let me leave this with you. Okay. Now, the last is this. The two last things before we wrap up and go. Remember the green cards? We talked to them. You got Dan on there
Yep.
and Gina. So let me finish them. Tell me about Dan. How do you know Dan?
We work together.
Work
He
together?
works in a factory.
Yeah. What's he
Yep.
do there?
He part-time drives, but sometimes he works in the office and stuff when there's no driving to do. He's kind of a low low driver.
So why would you recommend him?
Dan likes to try stuff. I mean, he's always looking for ways to make it. He hustles. I mean, he's that kind of guy.
He's that kind of guy.
I mean,
So
you need to do something, you ask Dan. He knows somebody that does it, or he'll do it.
Is he married or kids or home? Does he have them?
He's not married, but him and this girl. They've been together forever. About to get engaged.
Okay.
That's what he said.
So, team, when you fill out the green cards, make sure we fill out why the person is a great candidate. Get as much detail as you want. Just don't get name and phone number. Fill out, circle the married, kids, homeowner, whether they're over 25, employed, whether they make over 25,000. The STEAM stands for are they in sales, teacher, enthusiastic, ambitious, money motivated. And the last part is remember, you guys kind of had interest in making an extra $1,000 to $1,500.
Well, I mean, we need some money under that.
We need some money.
Yeah.
So why don't we do this? The way I see it, all right. We talked to you about making money and saving money. So what we want to do is a lot of times with people, we want them to come check out the company that they could be betting their financial future on.
Okay.
So we're going to ask you to invest an hour, 15 minutes out of your total life to take a look at this. So is this Tuesday coming up better or next Tuesday?
I can't really do it this Tuesday. I mean,
I'm available, but we need to wait then till next Tuesday we can.
I might be able to move that one thing. No, I don't know. And let's say I'll work. I'll work that. We'll come.
So we'll make
Well,
Tuesday.
that's
In fact, I'll get this. I'll get Pat to come pick you up.
Okay.
And then you can take a look at what we're at, and maybe one of the biggest areas we help people is teaching them how to make more money. Is that fair
Okay,
enough?
that's
and
fair.
then we'll get together. We'll bring back your financial game plan. You're gonna love it. I know it, and I know there's areas we can help you out. So we'll see you next week.
Okay.
Fair enough?
Yep.
Fair enough.
All right. Super. Yeah.